Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, we asked the question, did NVIDIA supply or become a little bit of an aspirin for the market? As well as that, Trump says his favorite word again, and I asked the question, do we see an early warning sign like a canary in a coal mine? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand for entering any trade. With that out the way, let's get started. So, following on from yesterday's video or yesterday's broadcast, when I discussed that obviously the market was like all excited about NVIDIA's earnings. And let's go over that, because initially NVIDIA pre-market after the earnings thought actually a little bit like an aspirin. And in some ways it is still a little bit, but anyway, we'll have a look into it. But anyway, going into the earnings, okay? Basically, their earnings topped Wall Street's expectations. You know, their earnings was announced at, oops, daisy, wrong screen. Sorry, was announced at 35.6 billion versus 34.1 billion expected. But again, we were expecting them to have quite good earnings because 2024 was a very good year for them. But what the market was really interested in was their forecast for Q1, because if you can go back, and I've done some other episodes on this for the last couple of weeks where I discussed Walmart's earnings were better than expected, but their forecast was not so good. However, NVIDIA's forecast was slightly better, and it again beat expectations, where their forecast was for the Q1 was 43 billion versus 42.0 billion expected. So that's good news, right? Well, the market saw it that way initially, and we'll go over the charts as well, because obviously the US session has now been open for about 45 minutes. Now, the Mag 7 looks like it got a bit of a boost on the back of it, because don't forget, NVIDIA is a major player of the Mag 7. But here's the thing. Here's the thing about aspirins. Eventually, they wear off. So let's have a quick look at the market and see how it's currently reacting to NVIDIA. And more importantly, let's look at the S&P 500, because don't forget, they've had 4 days of losses. So let's have a look and see how the market has reacted to this. So we'll start off with NVIDIA. This is on a 30-minute chart. Okay, initially you can see it opened here. So opened with a gap. Again, like I say, the market's been trading for 45 minutes. So it did get a boost because, like I said, that forecast was indeed slightly better than anticipated. And that was more important, was the forecast. But since then, it's worn off a little bit. And though it's trying to fight back for the session so far, it's still down 2.14%. If we look at on a daily, a bigger picture, you can see again, it opened with a gap, but currently it's still trading below where it closed yesterday. Let's have a look at the S&P 500, because here's the important thing on this, because I say S&P, again, opened with a gap, but though it's currently trading above the last candle, it's still trading roughly where it closed yesterday. If you look at the bigger picture, look on a daily, again, it's still above where it closed yesterday, currently at the moment. But again, the aspirin is wearing off. The same with the dollar index, not the dollar index, sorry, the NASDAQ, sorry. Again, if you look at a 30-minute, opened higher with a gap, but the aspirin's worn off slightly. If we have a look at the other Mag 7, which the whole Mag 7 was looking to NVIDIA to say, come on, give us a bit of relief here. We're getting smashed here at the moment. Tesla, okay, slightly higher. Well, Tesla was a different story we discussed yesterday as well. But still slightly lower than that. Meta, again, teeny bit of a boost. But if you look, it opened with a gap, but then came back down again. So the aspirin is worn off. Microsoft, again, this is a 30-minute chart, opened with a gap, but again, aspirin's worn off again. So my point being is that though it looks like it gave us initial relief rally, it does seem to be wearing off at the moment because there is other things, a lot of other things playing on the minds of the market, which leads me to the next thing I want to talk about. And that is, of course, Trump says his favorite word again, and that is indeed tariffs. He almost seems to say it almost every day now. Yes, Trump, got my teeth back in, say it correctly. Trump plans tariffs, as we already know, on Mexico and Canada, 25%. But this time, he says it's going to start on March the 4th, which is next week. As well as that, he's doubled the existing 10% tariffs on China. Okay. Again, starting next week. And here's the thing as well. He's also looked across the pond and he's also threatened, should I say, 25% tariffs on the EU. And he has a personal vendetta. These were his words. The European Union was formed in order to screw the United States. That's its purpose of it. And they've done a good job of it. So that's his belief. The European Union was designed to, take on the United States. In some ways, the European Union was formed for several reasons, you could say, to avoid military conflict again in Europe and to obviously make it a bit more competitive with the United States and with China. Not necessarily, in his words, screw them over. But anyway, result of this, of course, understandably, is that European stocks opened lower. And we're going to have a quick look at the euro and the European stock market at the moment on the back of these fresh threats. So let's have a quick look there on that. Let's start off with the DAX 30. Let's go on the daily so we can look at the bigger picture. See how it's actually performed throughout the day. As you can see, it is been lower today because obviously this is quite a big thing, threat. Because again, it's just escalating the trade war, isn't it? It really is. And if we look at then Eurostoxx 50, for example, again, which has been riding high from that Monday meeting several weeks ago in Paris, it hit an all-time high. Since then, it hasn't dropped. It sort of wavered a little bit. Again, like I say, a lot of investors are still preferring European stocks over US stocks at the moment. And you can see over the recent trading sessions potentially why. But like I say, again, we did that on a broadcast a couple of weeks ago, so check that out. But like I say, it is down for the day. UK dollar index actually for the day is actually slightly higher. But again, there's no threats against the UK this time around. If we have a look at the euro, how the euro is performing, again, under a fair bit of pressure. In fact, we've seen a bit of dollar strength on the back of this, and there's a reason for this as well. I can say dollar strength for many reasons because I'll show you some other instruments. As you can see, that's also another reason for that drop as well, which I'm going to talk to you about in a minute. Again, you see the euro has been under pressure against the dollar. We have seen a bit of dollar strength indeed on that, and there is a reason for why we've suddenly seen this big drop, which happened around about 3:30 and I'll tell you what that is now. Now, the other thing, early warning. Early warning. Now, I often say, or often said, that the US initial claims, which comes out once a week, every week, I always look at it as like a canary in the coal mine. I know I made that reference at the beginning of this video. Okay, it's like an early warning sign. And today's, initial claims, okay, actually came in at the highest level in 3 months. In 3 months. In fact, the number announced was 242,000 versus 220,000 expected. Now, there is a reason for this euro drop, and I'll go back to the charts in a minute while we're seeing a bit of dollar strength on the back of that. There's another reason as well, not just the US initial claims. It wasn't a surprise, it was expected. But US GDP was also announced at 2.3%. As expected, it was expected. But US GDP previously was was about 3.1%. So it was a bit of a drop. So the reason why we're seeing a bit of dollar strength over the last couple of hours is that realistically, if they've got a job issue, the job market is straining. And this is the main thing, is the job market. The Federal Reserve looks at the job market very, very closely. And if they see a slowdown in the job market or a big concern in the job market, they do tend to act. If the job market is stable and strong, they tend to sort of hold firm and hold steady. So maybe this could be an indication that, okay, there is early warning signs that the job market is not so good. Not so good. I mean, okay, it's only initial claims. It's not like the non-farm payroll, which tends to be a little bit more important, but still, it's an early warning indicator to have a look at. And the fact that it's hit a 3-month high is a worrying aspect. So I'm seeing dollar strength, A, for a safe haven aspect, and B, maybe the market's trying to double guess, but maybe this may spur the Fed into action. And you can also see that on my favorite as well, which, of course, it wouldn't be one of my broadcasts if I didn't bring it up, for obvious reasons, is gold. Gold is actually below today, 2,900. It's been riding high around 2,900 for quite a few trading sessions. And though it's testing that potential uptrend I've been keeping an eye on for several weeks now, it hasn't broken it, but it's holding firm around there. But it goes to show we've got dollar strength on that as well. So that's an interesting thing to look at. Definitely, we've got dollar strength. We can see that with the pound as well. The pound is weaker today. On the back of that, we're seeing dollar strength. Certainly, again, all around the time when initial claims came out. So maybe the market's now double guessing or running into the dollar. A is a safe haven. B maybe as a double guessing that the Fed might actually have to do something. In my opinion, I don't think they will. Reason why I say that is because at the end of the day, they're worried. Also, we've got an eye on inflation. Don't forget, a couple of weeks ago, we had a very high inflation reading of 3%. So that's something to bear in mind with. But what this does mean is next week's non-farm payroll might, for a change, prove to be really interesting. But let's face it, the NFP is not like it used to be. But you never know. This one might be. And I might actually do a watch along on that one next week. Anyway, that's sort of the major stories I want to talk about today. Like I say, it really is interesting to see how quickly that aspirin has run out or weared off since the start of the market. Worn off. That's the word. Worn off. Sorry, I got my words mixed up. But yeah. Anyway, don't forget, this is indeed a live show. So if you're watching me on YouTube, by all means, say hello, have a chat, share me your own comments, ask me a question. if you like. I'd like to know what your opinion is and what you think. If you're watching me on Twitter, I don't think the comments is so easy to do, but by all means, give me a like on there if you like this sort of thing, and follow us so you know next time I'm going live. And if you're watching this broadcast after it's been live, so you're watching it, say, recording back on YouTube, which quite a few people do, by all means, if you have a question or have a comment, put it in the comment section below on YouTube or on Twitter. I will see it and I will reply to that comment or that question next time I go live. So bear in mind you have that option too. Anyway, if there is no questions, if there is no comments, like I say, if you're watching me on YouTube, subscribe if you like, hit the notification button so you know next time we're going live. Give me one of these if you like what I do. It's nice to know that you like what I do. And same thing on Twitter. Give us a like if you like. Follow. Talk to you. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.